Hey everybody, this is Ray Halstead and Patricia Nass with REH CPA. Today we want to talk about rental properties. A lot of you out there are thinking about buying a rental property, and I have this question of, what all tax deductions are available to me if I were to buy a rental property. I've got Patty here with me. Patty, what can you tell us about tax deductions and rental properties?
Sure. There's actually a lot of ways to legally have deductions for rental properties. So a lot of people get a mortgage on the rental property. So you can take off the mortgage interest as a deduction against the income. Along with the mortgage interest, if you have loan fees that you're paying for that mortgage, you can amortize those over the life of the loan so you don't lose out on them either. And then real estate taxes, I would say almost every property has real estate taxes. Some states even have a business personal property tax as well. So if you're paying that, then you can get to deduct that too. And along with that, in your escrow, some people often miss the homeowner's insurance. Sometimes they think, well, I'm not paying this out of pocket, but it is coming out of your escrow. So you do get that deduction as well.
Yeah. What about maintenance and repairs?
So maintenance that you're doing when, to upkeep the property, if it's yard work, landscaping, pest control, things like that, those you can deduct in the year that you're paying for them. And then as far as repairs, if it's small repairs, fixing a leaky sink, fixing a hole in the wall, stuff like that, those you can also deduct in the year that you're paying for it. But if it's a major repair, you're replacing the kitchen, a bathroom, or anything that's that big, where you're improving the property, then you need to capitalize those and you'll depreciate them over the life.
Speaking of depreciation, are you able to depreciate the building, the actual structure?
Yeah, so you can. So residential properties, you depreciate over 27 and a half years, and commercial properties is over 39. But you always got to make sure you can't depreciate land. So you want to be sure to break out the building cost and the land cost.
Well, so that's some of the bigger deductions that a lot of people are aware of. Are there any other, deductions that people might not be aware of?
Yeah, so utilities, if you're paying for the landlord pays for the internet, if you're paying electric and stuff, then you get to deduct that. Obviously, if the tenant's paying it, you can't take that deduction. But there's also, advertising cost if you're trying to look for tenants, if you have a property management company and management fees, legal and professional fees as well. You get to deduct those. And, HOA fees, really just anything that's ordinary and necessary for the property.
What if you have to make visits to do maintenance work on the property? Can you deduct, mileage?
Yeah, so the IRS has a mileage rate that you can deduct. And so just keep track of how many miles you can do it. If you have to do repairs, if you have to go collect rent, you have to drop off supplies at the property, any of those things that you need to do for the property, make sure to keep track of that mileage and then you can deduct that.
What if, and this question comes up often, is what if it's vacant, and you're trying to rent it? What if it's vacant? Are you still able to take tax deductions?
Yeah, as long as you're actively trying to find someone to rent it out, you can take those deductions. If you're using it personally, then you can't. Or if you're using it part of the time personally, then you need to prorate that. But as long as you're actively trying to rent it, then you get to take all those deductions while you're searching for a renter.
Awesome. Well, that's really good information, Patty. If you are considering buying a rental property and you've got questions on tax deductions or the effects on your taxes, feel free to give us a call and we'll help you out. Thanks.